Mr. Anil Gupta, Chairman and MD of KEI Industries, is joining us to talk more about that. Mr. Gupta, let me congratulate you. It was very, it's very interesting that till some time back, wires and cables were not given its due attention in overall construction and home improvement space. Whereas, with personal experience, I can tell what an important part it is when you're doing up your place or even a full-scale building construction project is being executed. Wires and cables, it costs for 3 to 4% of the overall project cost. Maybe that is why people are not paying as much attention. Now, there's another big player, RR Kabel, which is filed for IPO, and people are taking it seriously. Those who missed out KEI and Polycabs. Talk to us about the runway of growth you are seeing in KEI, even with these kind of numbers and value creation under the belt last 3-4 years. Do you have good runway of growth, and from here on also things looking fine for market leaders such as you?
Yeah, good afternoon. I've been saying in all my previous conversations with the media that we expect a very good run rate for the wire and cable industry, and especially for KEI, projecting around 16 to 18% in top line increase in this year as well as in the coming years. And depending on the availability of capacity, even we can go higher. So we are working on creating more capacities, and definitely we will improve our version of growth. We are seeing a good traction from Indian economy. A lot of capital expenditure is taking place in the public sector as well as in private sector. And also industry is receiving a lot of demand from overseas markets, even from developed countries like Europe and America. And we will continue to see this demand, from these countries and many other countries overseas.
Domestic demand is good. The overseas demand is looking good as well. But talk to me about what is your market share right now and what's the target to increase it to?
See, I do not know what in the market share. Our market share in the cables is more than around 10%, and we are trying to improve upon it and by building up more capacities. So definitely we will be growing, but if we are growing by 18 to 20%, and even others are growing in the similar way, I think for the time being, for a year or two, we will be maintaining our market share. But going forward, we will definitely be accelerating it, acquiring the market share because of the build-up of the capacities.
Just almost the player in otherwise very fragmented market, right? I was just looking at the market share data, which will come up on the screen once again. Top 4-5 players still have anywhere between 10 to 15% market share, and that makes up 5% of the organized. How much of the market is still on the unorganized side? If you could explain to us, and the size of the opportunity for key players to grab more market share. And this is one part of the story, only domestic. You were also talking about exports opening up. First, let's talk about this part.
See, unorganized market, I don't think is more than 15-20% now. It is the grabbing of the market from unorganized players is one aspect, but the growth in the market itself is another aspect in India. So we are going to see a rapid demand in India from the new industries, private players, as well as public sector investment. And we are seeing a lot of demand coming up from solar and wind power companies and other traditional companies. Companies are coming up for setting up industries for solar photovoltaic cells, wind energy equipments, battery backup systems, and semiconductors. So a lot of new industries are coming up: cement, steel, petrochemicals, refineries. They are all on the expansion free. We are going to see a substantial demand coming up from these investments.
Yeah, that not just the traditional sectors, but the new industries, wind, solar, etc., is also eating a big pie in terms of the demand going forward. So that's good to hear. But just talk to us about margins as well. If I have it right, you were guiding about 11% margin by end of FY24. In terms of how the copper prices have moved recently, do you still maintain that stance?
See, the movement of copper price or other metals has no bearing on our margins, because we are always passing on the increased raw material prices to the customers as and when it happens. There may be a lag of 8-10 days or plus or minus, but on an average, what we have suggested, the margin profiles will be maintained. So copper and aluminium prices will not have any bearing on our margins.
Mr. Gupta, when China is going in a downward spiral and there's the overall commodity deflationary environment on the industrial side over a 5-10 year period. On the one hand, you have seen good growth and you're doing value add in your products, plus your RM is going down. Would that lead to a strategic kind of structural improvement in your margin profile in next 2 to 3 year basis?
See, the improvement in margins will come by volumes and by improving the customer profile. I don't think that margins will improve because of the fall in the raw material prices. Because as the raw material prices fall, every company tends to pass on the reduction in the prices of input cost in the finished output goods. So I don't think that it will have the margin profile will depend on which markets we are targeting and how much volume growth we are having, so that the fixed cost as a percentage to the cost goes down.
So you talked about increasing your capacity. Talk to me about what the capacity would be by the end of the year, and are you only doing organic expansion, or there's inorganic also which is in the pipeline?
See, we are not doing organic expansion only. We are doing debottlenecking in all our existing plants, and now we are setting up a new plant at Sanand near Ahmedabad with a large investment of close to 1,200 crore to be spread over next 2 to 3 years. So that will build up, that will almost double our capacity from now onwards in our existing plants as well as the new plant. And we will see that if we need to expand further by doing capex, that also we are watching. But whatever we are doing is organically.
Thank you, Mr. Gupta, for joining us today. Appreciate your time and speaking to us about a whole host of issues. And all the best for the coming quarters as well.